Hi, this is Kirk with Forex Trading Secrets. Today we want to talk about managing your account for profit, not just trading, but becoming profitable. We're going to discuss what can be possible in trading the Forex market. And we're going to take a look at a midterm strategy. Then we'll show you how to determine the maximum number of trades that you should take at any one time to maximize your profits. We don't want you to overtrade your account. So now we're going to go to some charts to demonstrate this. Okay, this strategy consists of three time frames: the 1 hour, the 15-minute, and the 5-minute time frames. So we're going to zoom out, and you can see this is obviously a downtrend. But we can see that clear up in this area when the market started turning to come down, and then it goes into a transition and starts going back up again. So we're going to zoom back in. And I'm going to take this section right here to illustrate my points. What we're looking for on the 1 hour, that's the largest time frame in this strategy, is a 4-bar. Now you might ask, what is a 4-bar setup? You notice that each of these indicators is in a bar. It's a rectangle, and they are all in the same color, and they're all in the same direction, going short. So the red, 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 red. 4 reds, that's a 4-bar setup on the 1 hour. Now this strategy is a 4-bar, 4-bar, 4-bar. Means that every time frame we look at has to have a 4-bar hit at the same time before you will be notified that that's a good place to trade. Now I'm going to show you how to do this manually, but there's a tool called the Norwood Strategy Scanner that can bring this setup to your attention. So first of all, we're on the 1 hour. Now we're going to go to see if the 15-minute confirms. So I'm going to bring this anchor and set it here at the bottom. Then we're going to go to the 15-minute. Now right at that same spot, there is another 4-bar going short. So that says, okay, it agrees. Now let's go to the 5-minute time frame. And the 5-minute at that point agrees also. So this may be a point where you would consider taking a short trade. And you notice that yes, it goes sideways a little bit, doesn't move very good, then finally the big part of the move takes place. Now let's move along and look at some others. We're going to look at this. We know that after we zoomed out, we saw this trend. Now we know that obviously we're looking at hindsight. This is where the market changes. Now do we know that before it happens? No, we might suspicion it because it's been going in that direction for a long time, and it usually likes to take a break. Now move over into this area. Now I'm going to take this line, and we're looking for a 4-bar going long. Okay, 4-bar, 4-bar, 4-bar. All those are 4 bars. Okay, that's on the 1 hour. Now it's below the trend is obviously down, so this is a counter trend trade. Let's see if you can trade these. Some of them you can, and some of them are not going to be profitable for you. Okay, it confirmed in 2 different time frames. Let's see if the 5-minute confirmed. The 5-minute did not confirm. See, it's red right here. So we would have had to have waited 5 more minutes, or the scanner would not have given you the signal for 5 more minutes, whichever you're doing, manually or automated. And then there was a trade right here. That was only 10 or 12 pip move to that point, but there was a bigger move here taking place. So the point is, yes, you can do counter trend trades, but don't expect them to be big moves. Now let's look across. We have to have a 4-bar before we can consider trading again. I want to share with you what this 4-bar. Now this is the original direction that we're going, and it started coming down. This gave us a 4-bar again. Are all 4-bar setups on the 1 hour going to be good trades? No, and I'll show you what happens here. So you won't get a scan, or if you're doing it manually and looking for this, this is when you say, no, I'm not taking that trade. Right here, that's the same spot that the 1 hour said it should go short. But on this 15-minute, we had to wait a half an hour. Okay, there's the 4-bar on the 15-minute. So if you've seen the one on the 1 hour, you confirm it on the 15-minute when it actually happens. Now let's go to the 5-minute and see if it was ready to go. No, there wasn't a 4-bar setup going short they'll clear over into here. Okay, now we have another 4 bar on the 5 minutes. The first place at the 5 minute was a 4 bar after we found the one on the 1 hour. But let's go back and see if the 1 hour and the 15 minute and the 1 hour are the same. Okay, the 15 minute didn't confirm, and the 1 hour didn't confirm. It's not a 4 bar anymore. And so see that how it filtered you out of that bad spot. Now the price now is moving back pretty strongly in the other direction. So there's a 4 bar right there going long. We go to the 15 minute. Is that a 4 bar? No. We had to wait until it became a 4 bar. All these 4 bars were above the zero line. And then the 5 minute. Was the 5 minute a 4 bar? No, it wasn't ready yet. Right there. That's where you would be, you should wait until that setup happens and then consider taking a trade going in the long direction. And it turned out to be a really nice move going in the opposite direction. So over here, it was counter trend. Over here, it starts becoming where it's not counter trend. If you go through our course material, the Nth Degree Plus, you'll be able to see why you would be interested in taking this trade, or you may not want to be interested in taking some of these trades. So we've talked about one strategy, an hour, 15, and 5 minute, taking a larger time frame, confirming it on a middle time frame, and then entering it based on a smaller time frame once they all line up in the proper direction. Now I want to talk about how to determine how many trades using the largest lot size we'll recommend to you you should take at any one time. And there's a little bit of decision. There's some room for you to decide if you want to be a little more aggressive or not. And I put this up here because I just want to take several trades quickly, and I don't want to have to go back and forth. It doesn't make a difference if they're buy or sells. That's not what we're looking for. Open up a brand new demo account. You're going to blow it up. You don't care whether you win or lose on it. So I'm just going to go here and open an account. And it's a demo account. And click next and next. And I want a $5,000 account, something that's more reasonable. And I'm going to use the leverage that can be found in the U.S. If you have, if you're outside the U.S. and you have the ability to have leverage larger than 1 to 50, then you can actually take more trades at one time. So this is what the minimum of number of trades you can take. And I'm going to click next. And you know all how to open a demo account. So that's all I've done is opened a demo account. And there it populated with the $5,000 account. So now I'm going to place buy trades. This is going up. It may not continue to go up. It looked like it's starting to slow. That's not the point. I don't care. I'm going to take buy trades. Look what happens when I take the first trade. Okay, this is the percentage you want to look for. It went from having a big number over 1,000% down to 437%. Now, what did I do? I have the lot size as 0.5. This is a $5,000 account, and I'll tell you how you would calculate that. I'll tell you briefly. If you have a $2,500 account, you trade with a 0.25. If you have a $10,000 account, you trade with a 1.00. Just off the top, and we'll go through that a little bit later so you can see what we're talking about. So we have one trade on, and that's the percentage. I'm going to put one more buy trade on, and with this second trade, we see that now this percentage has dropped to 217. Now this is where you have to decide. Do you want to only have one trade at a time, and it's got to be above the 400% level, or would you want it closer to the 1,000%? If that's the case, then you have to lower your lot size. Let's see if we can take another trade. It let us take another trade. It went down to 144, but see what it did? It turned pink. That says below about, I think it's 150%. Then it starts saying, warning, warning. 1 for sure, 2 I feel comfortable with, 3 I'm not concerned about. But let's see what a fourth one does if it will take, it took a fourth one. Now we're down to 108. Now I'm concerned. That fourth trade is questionable for me. I don't mind 2 or 3. That's my level of comfort because I know that I'm taking high probability trades and I have a chance that they're probably going to be winning. Right here, now we're going to see if it'll take another trade. It says no, it won't even take another trade. That's just the maximum number of trades you can put on with this lot size. This is over trading your account. I'm going to close one of these trades. I'll close this one. 144. I feel comfortable at this level. You may not. You may only feel comfortable at this level or above. And some people say, well, I'm going to lower my lot sizes. So you can determine that. That's how you determine to maximize your profits. You want to trade as many lots as you can on the trades that you are doing. Be consistent in a strategy so that you're doing the same thing every time. Then you'll get comfortable doing this. Now we're back to the PowerPoint presentation, and we're going to talk about being consistent by following one strategy. That's all we talked about, is one strategy there. Now there's some variations. You can possibly use a couple of different time frame scenarios, but we find this one works very well. One of the people in our PIP club that we'll talk about report this is the only strategy they use. It's the 1, 15, and 5. And they made 71 pips during the PIP club. And they made more than that throughout the course of their trading day, but that's what they use. They feel comfortable with it, and using smaller time frames or larger time frames just doesn't work for them. So pick one strategy. Now once you're consistent in making positive pips every day, then we're going to give you a suggestion as to how to increase the lot sizes so that you can actually make more money with the same amount of effort. Now let's start with a goal of, let's say you're shooting for 10 pips a day, and let's take that's 50 pips a week, and you have a $2,500 account. Now, you can use these numbers based on if it's larger or smaller, that's okay. In the example on the charts, we used a $5,000 account, and here we're going to use a $2,500. I wanted you to see the difference between a 0.5 and a 0.25 for the mini lots. That's the same percentage of the account that you're trading, and a 50 pips a week. So this is what this amounts to is 10 cents for every $100 you have in your account, or 0.01 lots per $100. So you can calculate that. Now, if you made the 10 pips using this lot size, it's $125 a week or $500 a month. That's a 20% return on your account, your $2,500 account. Pretty good return. Now, let's say you do the same effort, but you increase your skills and you make 15 pips a day. Same lot size, it's $187 and $750 per month. So you've seen a 10% increase. Now you're doing 30% by the same amount of effort. Now, can you make more than 10 or 15 pips a day? Yes, many traders do. But once you feel comfortable, then if you're trading a large number of lots, so you're comfortable in your account size, then you can make more money for the same amount of effort. Now let's focus on that 10 pips a day. You may want to start out by only shooting for 5 pips per day. That's just an idea. Once you do that, then go for 10. But we suggest that when you can make 10 pips a day for at least 2 weeks, then start trading live. Trade with the smallest lot size your broker offers until you can feel confident that you can make the 10 pips a day, then go and trade real money. So increase your lot size by 0.01 lots as your account grows. And take your time with these increases. If you want to do a little slower, that's fine, but you want to increase to start maximizing your efforts. So increase your lot size slowly and let your emotions catch up with your trading skills. Or let your trading skills catch up with your emotions. Once they're about on the same level, then you have a chance of being successful. This would be increasing your lot size by 1 mini lot for every $1,000 increase in your account. It's just different ways of saying the same thing we've talked about. So can you see that you can do it? Be consistent. Get a strategy, follow the same strategy, and start from where you're at. Then you need to get a good trading system. We recommend Nth Degree Plus. And that's why I have many students that have become very successful and are full-time traders by using this particular strategy and trading system. To help you bring these trades to your attention, you can use a tool called the Norwood Strategy Scanner. We've talked about you can do everything manually but you can have more trades brought to your attention if you're using a tool that is scanning and searching for them and bringing that strategy to your attention when it's in a high probability setup. So discipline yourself to follow some rules. Now learn to repeat those actions daily. Now the fastest way to get to 10 pips a day is to trade with someone that already knows how to make 30 to 50 pips a day or even more. And so what we have available that anyone can attend, and we're going to invite you to come attend this. We want you to come to our pip club and watch several traders use one or more strategies. Now, they're probably, we're going to be talking about a couple different strategies, but they're using the same principles. The strategies are based on time frames rather than changing the way. They're based on the 4-bar concept. Then you can be able to make the 10 pips we talked about depending on the way the market moves. This is a link you should look for on our website, forexstrategysecrets.com. That's what it looks like. Here's the website. So Forex Strategy Secrets, you can see that's the website. Anyone that logs into this home page can then click on this and get access to the schedule. So that's what you're wanting to do. You're welcome to come. We invite you to come, encourage you to come so that you can watch other successful traders take part. Now, we talk about 10 pips a day. What happened today? Today, the market wasn't moving very well. We had people reporting 15, 25, 30, 40 pips. That's about the biggest was about 40 pips for today. Yesterday was a better day in the market. The trades that reported to us were, I'm just going to read some, not in order, but one person reported 71, another one 90, another one 108, another one 17, another one 50. I got 48 pips myself, and that was on a pretty good day. So someone just visiting there should have been able to take 10 or 15 pips. Even today, you should have been able to take 10 or 15 pips. So come and join us and learn how to make a good steady number of pips per day. So with the nth degree trading course we talked about, you ought to consider this. You get to acceleration coaching program. Now this is what we teach you how to get up to speed quickly and not take forever to learn how to trade. You get the Fibonacci course, the videos on strong and weak zone trading. You know, the 4-bar is a zone trade, and there's weak zones and strong zones. When it's in an impulsive move, it's a strong zone. When it's in a corrective move, it's a weak zone. We talked about going with the trend, that's strong. Going against the trend, that's weak. 8 additional trading strategies that we've come up with are found in nth degree plus that we've developed from just the nth degree course. The trade grading system and 21 trading lab series. There's 21 webinars we had answering questions that people were asking us about the course material. So you get the course material and then 21 webinars to answer questions that you may have about trading. This offer has a total value of $3,985. This is if you purchased everything separately. But with this webinar, you get a discount of all of this information for $697. And that's a very discounted price. We want to get more people using a system that's going to work for them. And here's the link. This is for the nth degree trading system. You can type this into a browser, click on it, and then you can order right online within just a few minutes, 5 minutes or so. You should have access to the videos right online from our website. Let the strategy scanner do the work for you. We talked about the course. Now here's a tool. So if you let the scanner do the work for you, this means you'll do less work, higher probability trades, and you'll do it in less time. And here's the link for the strategy scanner. This is $100 a month if you want the scanner. It will more than pay for itself if you use the principles and follow the course material. Copy this link into a browser, and then you'll be able to have access to the scanner. If you have any questions, and to get your questions answered, contact Jed or myself at forexstrategysecrets.com, or you can give us a call and we'll answer your questions. So one review, here's the link for the strategy scanner, and here's the link for the nth degree plus trading system. I hope you found this educational as well as informative and a path that you can follow to maximize your trading profits by having a course, tools, maximizing the number of lots you take, and increasing the number of pips that you make. Thanks for being here. Well, I'll talk to you another time.